looking at poverty and inequality now, and this is an amazing picture that I found when I typed into Google inequality, and we can see on the left hand side we have a sort of shanty town slum of, you know, whatever kind of conditions. They're just nothing like the conditions on the right hand side of the picture, where we see what looks like a luxury apartment complex, and just such divergence and such difference in the living conditions, and so close to each other as well. So this is what we're going to look at from the specification and some key terms. So looking at income first, and this is money earned by a factor of production. So usually we're looking at labour and what people are earning, but it's also, we're going to be looking at the income as well of people that don't earn as well, and considering them people that maybe are on job seekers allowance. So it's the wages, as I've just said, and what you earn, whereas wealth is different because this is the stock of your assets and what you own. So income being what you earn, wealth being what you own. So one of the specification objectives asks you to be able to analyse, explain why there are differences in people's income and wealth. So in terms of wealth, coming from different families, different amounts of inheritance, different people have different abilities to save. So income is going to affect your ability to save, but also your cultural background as well will affect whether you believe heavily in saving or not, how entrepreneurial you are, or how entrepreneurial your family's been in the past. Chance and luck can play a very big part in wealth, and some people marry into wealth. In terms of income, household composition can have an impact. So if you're a single parent family, you're only bringing into the household one income, whereas two parent households will bring in two sets of income. So it's going to make a difference. Skills and qualifications may affect your ability to get a job or get a highly paid job. Discrimination, also negative discrimination, might hinder your ability to get a job or to get a highly paid job. Where you live will have an influence on your income. Even just looking at the same country, the UK, and looking at different average wages at different parts, much higher in the southeast and the southwest than they are in the northeast and the northwest. And wealth as well can affect your income. So that might not be intuitive, but in terms of earnings from interest and any investments that you make, you're not going to be able to make investments unless you have a stock of assets, some money to be able to invest. Okay, so the difference between inequality and inequity, you might have covered this at AS, but we'll have a look at it again. So inequality is where there is a wide gap between the income or wealth, so it can be measuring kind of income or wealth inequality. Make sure that you read the graph that you're trying to analyse the data from to determine whether it is income or wealth. It's where we get a wide gap in income and wealth, or wealth, between the richest and the poorest in the economy or in the area that you're looking at. And inequity is where there's an unfair distribution of income and wealth. So immediately what we're seeing there is inequality is something that's very measurable. We can measure how much more the richest in our economy earn compared to the poorest in our economy. But inequity has this word unfair, so it makes it more of a normative statement. So it depends upon whether you think inequality is an issue or not, whether you think it's unfair or not. And there are a few other definitions that you probably wouldn't have learned at AS. Horizontal equity is where people or firms with the same income pay the same amount of tax. And vertical is where the amount people or firms pay is based on their ability to pay. So that's the thinking behind progressive taxation and we tend to see that with more direct taxation, but we'd see different income brackets tending to pay the same amounts of direct taxation, depending on whether someone's been able to afford an accountant that can engage in tax avoidance schemes. But depending on how many items people buy that have indirect taxation applied to them, depends upon their overall kind of tax rate. So we might find, you think, looking at that, well, obviously every country would have horizontal equity and vertical equity, but actually indirect taxation is always regressive. So it depends upon what type of items people are buying, to whether you've got kind of horizontal equity and vertical equity as well. So this is one of the ways that we can measure inequality, and this is called the Lorenz curve, and it's a diagrammatic representation of the distribution of income and wealth. Something that goes with this also that you can work out from the diagram is the Gini coefficient. So this is a statistical measure of the degree of inequality or income or wealth. So the closer you are to 0, the more equality you have. So basically everyone earns the same amount. The closer you are to 1, the more unequal the income or the wealth is in an economy. And the way they work this out actually is they divide this space here. I'll get my pen tool out. This space here divided by the total amount of this triangle, and that will give you the Gini coefficient. You don't actually need to work it out for your exam, but you do need to have an awareness of how they can measure inequality. And the Lorenz curve is showing how unequal a society is. So if it was perfectly kind of 45-degree angle here, we can see it on this one as well, it would mean that everybody in the economy earns the same, which we don't have any examples of economies that actually do that. But you can see the more bent the curve is, the more unequal the society. So we can see that Bangladesh is actually a more equal society in terms of income and wealth, or I think this one's actually just measuring income, as is this one. So just be careful on what it labels it as. Bangladesh is more equal in terms of income than the UK, but the UK is more less equal than Bangladesh, but more equal than Brazil and the world generally. So those are the ways that we can measure inequality. And inequality over time, you do need to have some understanding of what's happened to it. And we're seeing that this is the Gini coefficient time series data. And we're seeing that, broadly speaking, it is increasing and getting to a higher number. I think these were all meant to be 0.04. So the closer you are to 1, the more unequal the country. We can see that the closer the Gini coefficient is to 1, the more unequal the country. The closer it is to 0, the more equal it is. So yeah, becoming more unequal over time. So looking at poverty now, absolute poverty is where someone is not able to consume the necessities that they need to sustain life. We usually kind of define it as less than $1 a day, but this was in 1996 prices. So in 2015, we'd estimate that to be about $1.90. I think what's really important to understand about absolute poverty is if you live in absolute poverty for a sustained period of time, you die because you can't afford to live. So that's a really, I think, something that a lot of economics students define it in these terms, but they don't really realise the human cost of people living in absolute poverty. Whereas relative, just back to absolute poverty, we shouldn't have anybody that lives in the UK in absolute poverty, but every country will have relative poverty, no matter how rich they are. And this is where people are poor in comparison to others. And if you're measuring on a country basis, poor in comparison to people in that country. So there's no standard measure of this, but we can, most places use this kind of rule that if income is below 60% of the median household income, you're living in relative poverty. It's whenever we're looking at poverty, we're really looking at it. It's not earnings. It's in terms of how much money you have to be able to sustain your living and living conditions and those things. So it's after taxes and after benefits have been added in, or transfer payments you might call them. So in 2011/12, the median household income was estimated to be £23,200. So the threshold for relative poverty in the UK, 6% of that would have been £13,920. And if I looked up what the minimum wage was, and I went for the higher figure, which was, because there was a different figure for 2011 and 2012. So I went for the higher figure, which was in 2012, which was £6.90 an hour. And if you work an average or a full working week, which is usually 37.5 hours, and times that by 52, you'd come out with £12,070.50. So you would have actually, if you were only earning the minimum wage and working 37.5 hours a week, you would have been living in relative poverty in 2011/12. Okay, so it's quite, it's there are a lot of people that are in relative poverty in the UK, and the more unequal that distribution, the more we'll see kind of the extremes. So there's always going to be people living in relative poverty, whatever country that you look at. But the closer you are to this kind of threshold point, the better off you are. The more unequal your society, the further away some people are actually from this figure, and they might be living off £4,000 a year. Unlikely with kind of job seekers allowance and the housing benefits that are available in this country, but it's not inconceivable. So causes of poverty. So unemployment obviously is going to reduce your income down, but also low wages. If national minimum wage, we've just seen, puts you under the threshold for relative poverty. Sickness and disability can affect your ability to get a job. You may find that you're discriminated against in the market. You may find that you need to take more time off work as well. You may find that you need to spend money on things that other people wouldn't have to spend money on, such as trips to the hospital, those types of things, kind of hospital stays can be costly, and it results in maybe lost income. Old age as well, if people haven't saved for pensions, or they haven't worked necessarily, so they don't access the state pension. People can find themselves in poverty traps as well, where it's actually they feel that it's more beneficial not to work than to work, because the marginal benefit from working would be very, very small. So, or maybe they'd lose some of their benefits that they're receiving. And imperfect information as well. When we were looking at the labour market, we were looking at the perfect labour market and saying that people have information, they know where jobs are, but a lot of people don't have information about jobs, and it's sometimes getting a job is about being in the right place at the right time, and it's just a lot of luck. And if you've been unemployed for a while, you might be kind of out of that network of people that know about the opportunities, so it can be very hard for people. And the consequences of poverty are that it tends to have a negative effect on health and life expectancy. We see a strong correlation between poverty and poor health. It can be poor physical health, it can be poor mental health as well. Although, obviously physical health and mental health conditions can affect anyone, no matter what income or kind of job they're in. But we do see negative effects of poverty, and this increases the cost for the NHS as opportunity cost for the government. We also see in poor areas, greater levels of crime. So we might have increased policing costs. And if people aren't working and they need, I've just put job seekers allowance down there, but if people, there are a whole host of other benefits that people are entitled to. So the poorer you are, the more benefits you're entitled to, the bigger the costs for the government of supplying those things.